So Sam, why should people find a professional mortgage broker instead of getting a home loan for themselves? Like finding one through, going through the channels and getting one through the banks.
Yeah, absolutely. Look, getting a mortgage broker, and certainly one that understands or has been in the business for quite some time and has put together quite a few transactions for people, is the key. Because it's understanding that, dealing with one lender, you're going to get, a bias and a focus just in that lender's products. And every lender has a different policy. They'll have different policies around what they'll take for income. They'll have different policies around what they will take as a deposit and genuine savings requirements. And some lenders even have a scorecard policy, which simply means that based on the information that you provide at the time of application, without even it being run by a human being, it will be a computer that either accepts or rejects your application based on score or points built into the application. Say, for example, even putting a home phone number on the application. Now, a lot of people are using just their mobile phones these days and don't necessarily have a landline number, but you understand that just having a landline number can actually improve your credit score, which is amazing. So understanding all of that information and that it differs with every different lender, that's what a broker does, and a good broker will be able to steer you through that process and essentially paint the best possible picture of you and where you're currently at and what you want to do.
Wow, I didn't realise it was so intricate and so varied amongst the different lenders.
Absolutely.
Yeah. Okay. No, that sounds great for going through a mortgage broker instead of trying to DIY. Yeah. And have you found that over the years that the lending criteria for the banks has changed?
It's become it's become more, there's a word I use, it's onerous. The word onerous simply means that in the process of lending, bank credit people are scrutinising applications, they are looking for more information, looking for more deposit history, are becoming more conservative. So it means that the work for a broker is certainly increased. The workload's increased for us, I'd say, by about 5 times, but it means that most brokers and good brokers don't charge you a fee for doing that because they get paid by the banks or the lender that you choose. So they're invested in getting you a good outcome, of course. And at the end of the day, yes, the banks have become more stricter, but it has meant that, there are ways in which a broker can steer through some of that strict criteria and get you, through the maze, if you will. Does that answer the question? I kind of went around and around a bit there.
Yeah, no, so basically it has gotten tougher, in a nutshell.
Yeah, short answer, yes.
For brokers tougher. And buyers.
Absolutely, yeah, I agree.
So what have those changes actually meant for your clients in their ability to borrow and get funding?
Yeah, look, certainly where some of the clients that I've had, and we've come through a fairly, tough time with the GFC for a lot of people. Our politicians tell us that Australia has remained isolated from most of the catastrophes that have happened overseas in the United States and in the Eurozone. But it affects us. And it has affected us. I've dealt with a lot of people in the last 2 years that have been doing it tough, and it just means that people have been not, willing to spend as much money, or have not been out there, actively growing business like they used to. At the same time, when it comes to, understanding what people go through in a business sense, and certainly where there might have been bills that they haven't been able to pay in the past, and say, they've received a credit default or something on their credit report, most of the major lenders, they won't look at you. They simply won't touch you if you've got an active credit default that's been registered in the last 12 months.
And apart from adverse credit, any other things that may affect the borrowing capacity of buyers at the moment?
Yeah, absolutely. What are the other significant things apart from having, adverse credit or some kind of credit blemish on your credit report? Is the bank's requirements for genuine savings. So what we're seeing across the board is most lenders are looking for at least 10% to get around the minimum requirement for genuine savings. So that, you know, for a $500,000 house, that's a lot of money. But you know, and we're seeing property prices, even though we've seen a little bit of in the market, it's dropped off a little bit, but we're still seeing strength in certainly in the property market, which is amazing. We kind of defied the odds a bit. Yeah, so talking about deposit requirements, where a lender requires you to accumulate genuine savings, you must have had 5% of the purchase price accumulated in your account, personally owned, for a minimum of 3 months, and in most circumstances over 6 months. So for a lot of people, when we're not saving as much, it's hard to do.
Yeah.
Really hard to do. So we have to look at other ways in which we can help people get into homes without having such a large deposit.
And are there any other ways, if people can't get a bank loan right now, are there any ways that you're aware of that people can purchase a home now and then maybe be able to transfer into a bank loan later on down the track?
Yeah, absolutely. Look, in my experience over the last 10 years, there's been a number of strategies that I've become aware of. And certainly, apart from some of the things that I can do as a mortgage broker to paint the applicants that I deal with in the best possible light and put together, you know, and steer them through that maze, there are strategies such as rent to own or an instalment contract, you know, where you can actually fund the property, you know, in a way that, or purchase the property in a way that gets you into the home, and then look to refinance that in mainstream bank finance a bit later on once the deposit requirements have been met and that you're meeting the general bank criteria. So there's a couple of steps involved, but it's, you know, it just takes a little bit longer, but it can be done.
So really like a form of vendor finance, is that what
Absolutely.
you're talking about?
Yeah.
Okay,
Exactly.
great. So all hope is not lost yet, and certainly it's sounds like a great stepping stone for people wanting to get into home ownership, but can't get a bank loan right now. And with prices actually being a little bit flat, it would be a really good time for them to actually get in now rather than waiting until the prices increased. And
it's a buyer's market right now. You know, people shouldn't be waiting. It's absolutely time to get in and buy the right kind of property at the right price, I guess. And something that, you know, bearing in mind the big picture thinking is that we've had, over the last 100 years of recorded history, we've had this stair-stepping approach to the property market, and we're actually at a bit of a pullback at the moment. Like you said, it's been flat, but we're seeing that the property cycle is 7 to 10 years on average. But for 2/3 of that cycle, property goes nowhere. But then in the third, you know, and I guess it's picking the third, it doubles.
Yeah.
It's amazing.
Yeah, it has. It does continue to increase over time. Yeah.
Kind of like this stair-step approach. Yeah.
Okay, so now's a good time, but we've just got to find ways to help people get into the home ownership process
Absolutely.
right now.
And it's got to be affordable.
Yeah.
You know, that's one of the other things that legislation has changed recently that requires we as brokers and certainly the lenders need to look at, you know, affordability in the best possible light as well, and that just goes without saying.
Yeah. No, that's fair enough, and it's probably sometimes good to have that legislation come in and to help buyers and also to help the lenders and the professionals maintain that standard. Yeah, no, I don't have an issue with that. Have you got any real life stories of any of your clients that may have been affected by these recent changes?
I do. There's one that comes to mind. An older lady had effectively looked to buy a property more recently, and this is one of the reasons that you know, legislation change, you know, for good, you know, for good intentions, has a little bit of a negative effect initially, where the requirements were that this particular lady had to prove, because she's older, she had to be able to prove that buying a home over time, that when she stopped work, because she was coming up to retirement age, when she stopped work, she could still afford the repayments. So we actually had to get a bit more creative than normal. And look, I am a qualified financial advisor as well, and most of the guys that we have working with us come from an accounting or a financial advice background, and we do connect people with financial advisors in circumstances that require it. So in this case, we had to look at a superannuation strategy. But once we were able to go that extra mile and then paint a significant enough picture for the lender to be satisfied that this lady could, in fact, afford the house, no problem. But on the face value, she would have been knocked back every time.
Oh, wow. So age is now playing a part in their lending criteria as well.
Yeah, look, and most lenders will say they don't discriminate on age, but it comes back to, well, what happens when you stop work and you stop earning an income? How do you keep paying the payments?
Yeah.
So that's a consideration that we need to take into account.
Yeah. Okay. And if one of our viewers today was thinking of buying their own home, what's the top 3 tips that you can give them?
Yeah, number 1 would absolutely be have a plan. Know what you want. So, draw out on a single piece of paper is ideal. So, what is it that you want? Where is it that you want to buy? How much can you afford? That way, when you have a conversation either with, dare I say it, with your bank or with a broker, and I'd say choose a good broker, someone that can help you steer you through that process. That's number 1, have a plan. Number 2 is certainly understand what it is that you're trying to do, and this goes in with the planning side, not just now, but well into the future. Have a wealth creation focus. That's something that we tend to plan for the next 3 days and forget about the next 3 years. But we actually want to have something in place that's going to take us through to the next level. And finally, seek advice. Absolutely seek advice now before you sign on the dotted line, because once it's all done, it is so difficult to go back and try and fix things.
Yeah, no, that's very true. We've all learned that sometimes the hard way. Yeah. So